First day, Fed day. All right, good morning, everybody. Thank you for your patience. Tough morning, happens from time to time, but thank you anyways. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Wow. 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 Hey, good morning. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Throw your diamonds in the sky. Thank you for being a client to TradersWay. We appreciate you. We work hard for you. If you have not become a client yet, however, you're enjoying these daily webinars that I do for you, covering strategic and tactical Forex trading strategy, technical and fundamental analysis, you show your loyalty and respect by at least opening a demo account at TradersWay.com. Over time, like water over stone, we will help you succeed. It's not bad, right? I mean, think about conservative, disciplined trading skills. No tricks, no smokes, no smoke, no mirrors. Yeah, you're saying this, you're asking if this is a photo of me? Yeah. 10 years ago, I guess. Not 10 years ago. Not 10 years ago. 8 years ago? Something like that. This is from an interview. I used to write a magazine column every month. Also every week I did something on Forex television. I think this is a Forex television interview. So when was that? I don't know, 2007, 2008? Yeah, I guess it's almost 10 years ago. Gee whiz, huh? Notice the weather that I was tracking hurricanes in real time 10 years ago. It didn't seem like a long time ago at the time. It seemed pretty recent, but oh, I guess, yeah, suppose. But anyways, yeah, I've been doing this a long time, I guess is what it all comes down to, right? Been doing this a long time. I've figured a few things out. I've made a few mistakes, and I'm willing to share everything I've learned in hopes that you become a patient, disciplined, successful, professional Forex trader. Thank you for being a client to TradersWay.com. And thank you for posting your trade plans on Forex.Today. Huh? I think a few people have been slacking. What's going on? I see the same 5% of attendees posting and the other 95 not. I don't really understand that, but okay. All right, so anyways, let's go through technical analysis. So that's what we did yesterday. How interesting is that? And one of the things we talked about, look, we're actually at the price, but one of the things we talked about yesterday is knowing which one it's going to do. What is the trick? I guess I should lean back a little more, huh? What's the trick? Well, nobody knows what it's going to do. The one thing you do know what you're going to do is what you're going to do. And if the market agrees with you, you get paid. Okay? So what we said yesterday is if you were a bear, you'd be selling off the moving averages. Cool. And that maybe it plunges down into the green zone, in which you can consider buying it up in sort of a counter trend or back into the trend trade plan, right? Okay, that's all it means. So we drew having to come down to, gee whiz, I can't see that, $117.5, 117.5, no, 13. I can't even see that, 112.5. Gee whiz, I'm not even close. I can't even see my glasses. Oh, I think these are dollar store glasses. What? 112. So I think basically 113, right? Sorry. What? Yeah. So basically 113, and it came down to basically that. It could have gone a little lower, but it played the site, which may leave the door open for it to head down even further. Okay, well, all right, fine. But nonetheless, it's by and large achieved, right? Was it impossible to catch? Well, what did it do? This is a 15-minute chart. What did it do in the New York session yesterday? Because we were above this gray line. So this is what happened in the New York session. Have I taught you how to trade that? First of all, moving averages pushing you down, pushing you down, pushing you down. Finally, you get wedged right into support. And then what? Look for the break. So it did break. All right, so break, pull back into the roll reversal. I mean, that's Wayne 101, isn't it? Wayne 101. Yeah. Right? I mean, that's just straight up how you trade a breakout. Yeah. Any thoughts or questions about that? So there's a strategic play here that we drew with the orange lines in the New York session. The strategic side, I guess I have to kill my dog tool, and I still haven't. All right. So the strategy part is, hey man, based on where we are Monday morning, it's either going to head up, right? Or it's going to head down. Now you're like, Wayne, you know, that's always, you know, like that. No, it's not always like that in that price area, right? Because what we do know is this is the zone in which a bull will buy. How many see that? And we know that as technical analysts, we know the bulls are going to buy there, or there are just no bulls. Anyone that's taken the swing trading course knows that that's just a straight up fact. That's where the bulls will buy, and if they don't buy, there's no bulls. If you agree with me, say aye. So that's why I say it. It's not like, Wayne, it can always go up or always go down. Only if you have no idea what's going on. Right? Look, if you have no idea what's going on, then sure, it could, at any moment, it could go up or down. Well, that's beeswax if you know what's going on. Because you know it's only going to go up if bulls are buying. It's only going to go down if bears are selling. Or I guess you could argue the bulls taking profit or bears taking profit. Okay, that's fine. It's the same sort of thing where there's a raison d'etre. There's a reason for it to be going up or going down. It won't. It's not probably just going to randomly go up or randomly go down, is what I'm saying. I don't believe in a random walk for Forex. I really don't. It's in my soul, my DNA, in my bones. I don't believe the random walk theory. Unless, of course, you're completely uninformed and it would seem random. No, right? If you can't predict the future, get the hell out of the market. Because I'm gonna mop you up, right? So it did fall. Not enough bulls at that price. Right? See, that's also interesting because if there's no bulls at that price, well, what's the next price? And I think that's one of the things I covered yesterday, right? Like, it's just your job. If you're a bull, you either buy it here or you buy it here. Is that what I said yesterday? If not this on a different pair. It's just like that's that. Okay? You don't have to do anything else. You don't have to say, well, I have to sell and then I have to buy and then I have to sell. No. You're a bull. So you're like, oh, well, this week I think on this USD yen, I'll either buy it here or I'll buy it here. Okay, whatever. So the other thing, if you're an intraday trader, you see it breaks down, pulls back, breaks down. Asia. This almost looks like the chart right out of my non-farm payrolls setup explanation, right? Isn't that interesting? So, Peter says not S1. I don't see S1 as a buy-in entry. No, it's not my book. Unless we're ranging. Thank you, Ryan. Yes. Well said. You're right. Unless we're ranging, then it's an S1, R1. So, yeah, I wouldn't call that ranging. To me, that even smells like a breakout that way too, right? So, what are you going to do? This is a mediocre setup now because as a bull, I wanted it to go down to 89. I didn't want it to go to 0. There's a slight difference, right? So I got to be a little careful. But a traditional breakout, if you're going to call this an intraday range and you're already a bull, then you're going to look for this. Hello? I'm not saying that's going to happen. If it had hit the 89, which is not a random, like I don't say, well, 89 is a special number. It's a pivot cluster. monthly and weekly pivot cluster. That's important to me. Plus the psych. But just the psych is not as important as the multi-dimensional support cluster and psych. You see what I mean? So if it hit the cluster and the psych and popped, I'd say, see, it hit the pivot cluster and the psych. And I'd say, we did it, we printed it, everyone traded it, boom. Well, we're not there, so maybe we didn't get all the algos into the trade or something. So I still think there's some risk that it does come down a little further and then does this all over again. So maybe a bigger stop. Okay, if bigger stop, then smaller lot size. What? We'll tiptoe into this one. It's not an old man easing into a hot bath. It's an old man easing into a cold lake. Grandpa, put some clothes on if you're going into the lake. Grandpa is wearing clothes. He's just that wrinkly. Yeah. All right. So, anyways, we got this. Okay. What if you're a bird? What if you're a bird and you still want to sell? Life is great, life is grand, life is good, life is profitable. Right. Okay. But I will caution you that it's less good because of the consolidation breakout, and you're dumping it into a buy zone. Because even if you're a bear, you still have to recognize that there's bulls sitting down there waiting. Do you know how I know? It's support. If you don't see it as support, then there's no bulls there. Oh, Wayne, all the bulls took vacation this week. Really? Right? Cases you could keep stop loss really close. Yeah, that's generally a recipe for loss. So when I mentor people, one of the first things we do is we start looking at stop loss placement. And boom, all of a sudden people are like, damn, I've never seen profits like this before, ever, Wayne. I'm like, yeah, because you keep getting out of the trades because you trade scared. You scared, boy? You scared. But it's true. It's one of the first things I do. I'm like, well, I have to judge your entries. I have to evaluate and validate your entries. How can I do that if you keep getting out with 8 pip losses and 12 pip losses and 18 pip losses? How do I validate the quality of your entry if you don't stay in your trade? So one of the things I do is we start validating the entries, and all of a sudden you're like, oh my God, I'm so profitable. I'm so much more profitable. I'm like, yeah, it's because you have no risk management. You're right. So a lot of what I meant, and I haven't mentored somebody in a long time, but inevitably what I find is you think it's your entries that are causing your mediocrity, but it's almost always your risk management. Yeah, yeah, but I used to charge money and we'd meet every day, one-on-one. But who has time? I mean, we're in the, who has time? Who has time for these things? So anyways, that's what I'm saying, Kay, is you can keep your stop closer, but you'll probably just lose money. Not necessarily. I'm not saying no. But why don't you cut your lot size in half and double your stop? Yeah. You're like, well, it's only half as much reward. Well, it's the same reward relative to risk, but it's half the risk. Has nothing. Who cares about reward? Once again, when you go to raise money from clients, you're like, oh, look at this. I make 600% a month, 3 months in a row. Sweet, great. Not interested, because they're not interested in the rewards. They're interested in the risk. I'll give you an example. Russian roulette. Hey, you pulled the trigger 3 times and you're not dead yet. Sweet. Great. Yeah, awesome. Keep it up. You know, just keep it up. It only takes one bad bullet. I mean, that's it, right? So you're like, oh wow, 3 months in a row. That's great, because this other trader, he went 5 or 6 before, blowing up the trading account. Well, it's not the luck, it's the bad luck. You're like, oh, like when I was in Dubai, I was talking to a guy, and he was an oil trader, and he got all excited because trader talking to another trader, it's great, right? And he knew me. So anyway, so he's like, oh, I know you. And I'm like, what do you trade? Oh, I'm a CL trader. I'm like, oh, oil. I like oil. Sweet. Right? You do the WTI. Are you a Brent boy? Oh, I like a Brent. Right? Whatever. So we get into the trader talk. And I'm like, great. So are you trading now? He's like, no. I blew up the account. I'm like, oh my God, you blew up the account? How'd you do that? And I can't remember what it was. It was like not Brexit, but it was something. It was some like news event. Like I can't remember what it was, but it was just like, oh yeah, some news event. Oh the Fed thing. Whatever. And I'm like, what? Like you can get unlucky in trading. That's fine. That definitely can happen. It does happen. I've been unlucky a lot. More. I'm rarely lucky. How about that? I'm almost never lucky, but I'm unlucky a lot. But should your bad luck blow up your trading account? Like, oh well, I was leveraged 900 to 1. I was doing a 1,000 to 1 on lot size, whatever. You know what I mean? I was in for five standard lots with $5,000 in my account, and the news just killed me. I got unlucky. I mean, it's ridiculous, right? That almost killed the conversation. Well, it actually did kill the conversation, because I'm like, I don't want to talk to you anymore. Like, oh, really? Romper room trading? Is that the name of your firm? You dumb, or whatever. But so I hope all of this is clicking. I don't know what the message is here. Right? Be small, stay humble, focus on the long term, never risk money you cannot afford to lose. So instead of tighter stops at the full risk, why don't you just have half the risk with double the stop? Well, there's a saying from bomb makers, Ryan, that if you're a snake, charmer, something like this, you will be bitten. and it came from a bomb description of people that make bombs. Right. You're like, how do you know that guy's a bomb maker? He's only got 3 fingers in one hand. Something like that, right? That's how you find him. It's that guy. That guy is the bomb maker. All the other ones have been blown up into smithereens by their mistakes, right? Yeah, Anthony, if you're missing, it's because of the time zone and stuff. But I did send out an email reminder 40 minutes before the start of the webinar, though. But if you so whatever. So that's where we are. You can sell down here. I was kind of hoping for it to come to the bottom and buy, but it didn't quite, so I don't quite believe it, but you could. You could set this up now like a roll reversal here as a bull. Didn't quite happen here. As a bear, you'd probably want to sell it up high, so I would do it more like this. But I think that's dangerous because M2 is not supposed to be your sell pivot. Okay. Okay. And by the way, just to describe this area here, when the market opens strong for your bias, right? Outside of your pivot swing outside of the swing strategy, okay? You use the moving averages. So if you're in here and you were a bear, you're not in a sell zone for the swing setup that I teach. In that scenario, you use the moving averages. But you got to be careful because if you're a bear here, it's already very bearish. If you were there at the market open, you could have sold at the weekly central, but you had to be there. I mean, you only had 4 hours to set that up. Okay. But after that, the pivots are kind of useless to you as an entry. So you got to use the moving averages and be a little cognizant of the fact that you're a bear in a market that's already very bearish. So you got to be careful of bounces, right? But the big bounce is here, and that's why I marked that yesterday. So there's a lot going on here as far as the support and resistance and stuff. Okay? And again, you know, this is where we were yesterday, and I said, well, it'll probably come down, right? Notice even though we're at support, I'm like, it'll probably come down to the M2, noticing that this is a bounce zone. That if there are bulls, that's where they would buy, right? So down, isn't that funny though? Down to the buy zone, right? And it did fall. It did come into the buy zone, except there were just simply no bulls. Cool, right? Cool. Otherwise, we would have seen it head up, and we'd be doing this right now. So I kind of like that. And then it gets pretty close, within 10 pips. Actually, less than that, within 8 pips of the projected bottom. We didn't get there, so I'm a little nervous. I'm not aggressive as a bull here. I'm actually quite disappointed that it didn't come down and make a perfect bounce, because now I don't know if I can trust it. You know, and I don't know, that guy's kind of creepy. I don't know if I trust him. It's kind of like that, right? I'm sure you've met someone that hasn't done anything wrong, but you just don't trust them. It's kind of like that. Like, nothing weird happened there, but I just don't really trust it. Brooks says that's 50% feedback. Yeah, that's not important to me though. But I mean, you're right. Alex says, is that signs that people were aggressive down at the support? I suppose you could read that. You could. I'm not, for whatever reason. Look, first of all, there wasn't an amazing move after the fact. It just makes me wonder, did they not see it? You know, like bulls wouldn't have bought aggressively, right? Let's do it that way, Alex, right? Bulls would have bought at the support, not 10 pips above support. That's how I read that. Why did the bears get out then? Is it the bears being aggressive on their exit, which means they're not necessarily aggressive? So it's the other way around. Was it the BOJ stuff? Yeah, maybe, right? Right? So to me, it's not aggressive bulls, it's nervous bears. It's conservative bears. Does that make sense, Alex? It contradicts what you're saying, but we're talking about it out loud. So I don't know, because your guess is as good as mine, but I don't read it as aggressive buying. I read, well, not buying from bulls, it's buying from bears, and bears are buying because they're short, so they're offsetting their shorts and exiting the market, but no one is actually long. So they can't be aggressive if nobody's actually long. So I don't know. All right, so let's go back to those, right? Those. Let's do it that way. Okay, great. These are my support and resistance lines for the pound yen. Buying down here is acceptable, right? Selling here or here is acceptable. What do you want to do, yo? Now this had to do with, yesterday we were talking about vulnerability around the head and shoulders and stuff, but I believe what we talked about yesterday was this being a buy zone. And that you got to be worried about the head and shoulders up into here. I think that's where we were yesterday. So not a lot. What do you think of the BOJ stuff? This sort of like, they don't want to do anything new till next year kind of thing? Yeah, but I don't, it didn't have the impact I was hoping for. So I'm still holding out for a rally. Rally in the yen pairs, right? I don't know. Do you need a catalyst, Ryan? How about the catalyst of making money? Well, like I tried to show you guys yesterday, I know you get frustrated, which is a normal reaction. But the only thing I can verify is we talked about the third week of August being the beginning of a rally that has the potential to go from all the way to Thanksgiving, but hopefully till the end of the year. Okay? We can all agree to that, right? How many people agree? Third week of August goes all the way to Thanksgiving, hopefully to the end of the year. Cool. Then it rallied from 39 to 53. Right? That's 1,400 pips. Would you agree that that seems from the third week of August to the third week of September, 1,000, what did I say, 1,400? 1,200. 39. I'm not thinking clearly because I got other things in my mind too, right? Yeah, 1,400. Just under 1,400. That's 1,400 right there. So a little less than 1,400. Would you consider that a rally? Okay. And is a 382 Fibonacci retracement not only likely, but probable in any scenario of rally retracement, rally retracement, rally retracement? Okay. So what's the problem? Did you buy it down here at 47? We're on our way to 50, right? Did you buy it 300 pips ago? Did you buy it 200 pips ago? Did you buy it 100 pips ago? This could have been a buy, this could have been a buy, this could have been a buy. Right? What's the problem? Wayne, I'd like to get richer faster. Point made, I hope. Like, at what point did it not do what it was supposed to do? What point says freak out? What point says cry? What point says be disappointed? Well, okay, yeah, we're all disappointed that it didn't go up and up and up and up. But nothing, right? On this daily chart, nothing is out of the order, out of the expected, out of order. Yeah, well, that's the challenge, though, right, Robert? So what's the takeaway then, Robert? You have a plan that you put on paper 8.5 months ahead of time. Should you be making decisions on a 15-minute chart based on your strategy from 8.5 months ago? You know, are these weekly swings, monthly swings, daily swings? You know, like, so I'm just saying, analyze what's happening now in the real market in real time. And when I say analyze, like, tear this apart, think about it step by step, devour it, consume it, own it, be it. Because what I'm really worried about for you is, what are you going to do next year? Okay? See what I mean? This year really to me is irrelevant. This is me, like, I'm shoving this down your throat. Day after day after day, week after week after week, month after month after month, quarter after quarter after quarter, year after year after year. And somehow you got to get, you know what I mean? You got to take it to the next level, or whatever that means. I don't even know what that means. It's like, once again, If you knew the future, could you make money? Yes, Wayne, I can make money. All right, this is going to go up significantly for months and months and months starting the third week of August. Okay, Wayne, I'm totally on board. Wait, I'm not making any money. They're like, wow. So you knew the future and you still didn't make money, right? So then, like, it's not an insult. What I'm trying to do is, like, get you emotionally committed to changing. Like, now you got to be emotional and say, holy crap, he's right. Right? And then intellectually create a strategy for change, right? You should say, how did I miss this? Because that's now the problem, remember? Like before, you're like, well, maybe I'm not good on technical analysis, or maybe I'm using the wrong indicators. Maybe I need the ADX. Maybe I need the CCI. Maybe I need 5 Bollinger Bands, right? All this kind of stuff, right? Maybe it's because I don't understand fundamental analysis. Maybe I need more central banking. Maybe I need more macro. Maybe I should take a finance class. No, right? We're removing all of that now. There was one clear set of plans discussed for hundreds of hours, right? There, just do that. And if you didn't get right, then we need to figure that out, right? Isn't that now the essence of it? It's not the technical analysis, it's not the fundamental analysis, right? Am I not right? Are you guys mad at me? Is it my fault? Right? So that's what I'm trying to say. So you need, by the way, thank you for typing it in, because that's embarrassing, right? It's embarrassing and insulting, but either I'm insulting you or you're insulting yourself, but it takes a lot of courage and strength to admit that you're like, you're right, you're totally right, right? But you need to get there. So then, with that admitted, with that put on the table, then we need to focus on what was missing. Because that's all we need to focus on. That's all, right? It's not experience, right? Just, right? In this case, it's a lack of experience. And I know in July and August, I made fun of this. I made fun of it. I'm like, no one's going to listen to me. No one ever listens to me, right? That there's, out of the thousands and thousands and thousands and thousands, right? I just know of people I've taught over there, most people just don't do it, right? They just don't. I'm like, it's going to happen. It's going to be slow, and you're going to cry and say, nothing's happening. This ain't working. This ain't good. And then we'll be at the end of the year, and you'll look back, and you'll say, holy crap, how did I miss this? If I only, because it's normal. What's abnormal is then you recognize it, and then you say, I will never, ever, 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 ever miss that again. Ever. Okay? But now you know what you can work on, right? Right? You see that? It's not the technical analysis at all. It's not the fundamental analysis at all. It's not me, it's you, right? So you need to be the type of person that stands up and fights for yourself. You're going to fight for this. So what is it? You need to go back and analyze, right? Analyze. So I'm just trying to point out the fact that this might be over, sure. Yeah, maybe this does head down here. What I'm trying to tell you is if it does head down there, First of all, I will be disappointed. Second of all, it's going to be technically important. But it hasn't. So you can't be sitting around crying that it only moved 1,400 pips in 4 weeks and it made a 3A2 Fibonacci retracement and you believe it's all over. It's a little bit absurd, isn't it? So to know what's going on here, we know the areas where we'll be threatened, okay? This was an obvious threat. The top is going to be an obvious threat. That's why I have these drawn, okay? Okay, that's why those are drawn. So as a bull, where are you buying? Okay. Let's talk about it. Why is this an interesting place to buy? I'll put there. The blues in question. Well, once again, anyone that has taken the swing trading course. This is, let me preface this. I created the swing trading course in June and released it in July and called it summer school and told you don't even trade the month of July and only spend the entire month of July preparing to go long the third week of August using the monthly swing trading strategy. I mean, that's crazy front running this whole process. Because I'm actually designing something 10 weeks in advance to teach you 5 weeks in advance so that you're ready. Okay, great. Preface all of that. Great. So then the new month occurs. Check this out. This is the buy zone that I put in the video. Right? How many people will agree with that? That's it. That's your monthly swing. Well, that's an amazing coincidence. Is there any other place on the chart that I would throw in there and say, well, if it's not this one, maybe it'll be this other one, or maybe this other one, or maybe this other one? Is there like 900 lines that I put on the chart so I can always go back and say, well, this is a buy. You could have bought it here, genius. I'm so smart. You could have bought it there. Or is that like the only place? Right? Robert's like, that was it. Like, son of a, right? This is where you throw your fist, like, son of a. Okay. Cool. I mean, I'm trying to put layers on, right? I'm trying to put the onion back together. Right? Yeah, but it's the monthly central pivot. Well, I guess it's a little higher than that, right? So that's the bounce, the pullback, the bounce. Now it's got a higher high, retraces back into the rule reversal, in which it's yet another high. Cool. Cool. Yeah, a lot of CAD news. It must be after 8:30. I don't even want to watch anymore. Yeah, 8:32. You got some good CAD news. So anyways, guys, so if things work out, and we're staring at this at the end of November, smiling. Well, at least the third week of November, smiling. It'll look like this. Okay. If we're unhappy with how this turned out, then the Elliott wave traders We'll describe this as a three-wave correction. And we're actually on a longer term down. And this area will then at some point act as resistance. But I'm not ready to accept that right now because I have a bias. That's it, because I have a bias. And because I have a bias, I have to stay with my bias until I'm technically proven otherwise. Okay. I want to get rid of this and this. All right. So maybe we got lucky here that in the month of October, the exact buy zone held. And you're like, yeah, but Wayne, that's after the 1,400 pip move. So how does that help me? Well, in June, when I was recording the swing trading video so that you could study it through the month of July, so you could prepare for the month of August. Right? This is the week you should be prepared to go long. But check this out. This is the buy zone that I recorded in June for you to go along. There's no short. We never once talked about, we didn't talk about shorting in September when I did the video in December or January or February or March or April or May or June or July or August, right? So in December, we were talking about longing in September. In January, we were talking about longing in September. In February, we were talking about longing in September. In March, we were talking about longing in September. In April, we were talking about longing in September. In May, we were talking about longing in September. Where am I now? May? In June, we talked about longing in September. In July, we were talking about longing in September. In August, we were talking about longing in September. Is that an exaggeration? Come on, guys. Am I exaggerating even in the slightest? And then in the video training course to prepare you 6 weeks early, this is the buy zone. Is that a fact or in the slightest an exaggeration? Doesn't seem like a random walk to me, does it? So, once again, and hopefully I'm not beating a dead horse because I love you. I don't want you to be a dead horse. What the hell are we going to do, you and I, to get you to the next level? Right? This is a motivational speech. This isn't me talking you down. We're cutting off the fat here. We're getting lean and mean. Right? I mean, like, oh my God, right? This should be like an oh my God moment. Oh my God, he's totally right. We spent hundreds of hours of preparing for that. Cool. Right? Cool. So anyways, let's go back to this. Ideally, wouldn't this be great? Because I don't know if any, by the way, right? I don't know the future. I only predicted that. I just got really lucky it started on the third week of August. That is like super lucky. Awesome. Cool. So it went up, came down, made a 382 Fibonacci retracement. What's our target? Let's use technical analysis here, not a calendar. What is the target based on technical analysis? We'll call this a roll reversal. It's the same on this chart as it would be a 15-minute chart. It's all the same. No? Oh yeah, 382. Yeah, you're right, 1618. Cool. So do you remember I had a fib here? I just removed it like 4 minutes ago. Okay. Wouldn't this be neat if this was a November monthly pivot target? Wouldn't that be sweet? Wouldn't it be awesome if that was R2? It would be awesome if it was R2. So I am still on board with this. Still on board. There's nothing technically going on here for me to worry about. This is going up because I said it will. Is it the same for Aussie yen? Nothing's the same. For example, pound and Aussie are different currencies on different sides of the planet that have different macro and fundamental things that make them strong or weak, different central banking policies, and different governmental scenarios, not to mention outlook for trade. So they can't be the same, Elias, except for the yen. So if the yen weakens, and I know you've done your research on the Bank of Japan information that came out 12 hours ago, 14 hours ago. I know you spent time on that because you're a professional. And we know how important the yen is to all these pairs. So I know you've researched the heck out of that already. Great. So does that mean Aussie and Kiwi and CAD and pound and euro and Swissy and ZAR and Turkish lira and Polish zloty / yen are all the same? No. You will now, right? Right? You will need to do analysis both fundamentally, technically, macroly, and decide which one you buy if the yen indeed weakens based on your outlook for the Japanese yen, which means you're going to need to have an outlook for the Japanese yen. And the cool thing is if you're wrong, you'll know it. One thing you could do is watch all the yen pairs at the same time. Oh, snap! Like this. Look at Euro yen, USD yen, Aussie yen, Kiwi yen, CAD yen, pound yen. Hmm? Ideally, they're all going up. Okay. Doesn't look bullish at the moment. Okay. This one has gone through that first level support like we were looking at pound. So maybe CAD and pound have different things going on. Maybe bulls are watching different buy zones. So here's a buy zone that we're on right now. Okay. We are on a monthly, and I believe it's weekly, but it's down there. There you go. Right, I think that's weekly support, monthly bottom. The projected bottom, by the way. The projected bottom for the month of October. And it's the last day of October. That's funny, isn't it? On the very last day of the month, we're on the monthly target. That's funny. I wish, if I was a bull, that this had already gone up. This makes me feel very, very bad that we made a lower low. It'd be very interesting to see what happens over the next few weeks if it starts meandering back up, right? So anyways, you got to do your work, you got to enjoy it. Do you see the correlation here? No. Now, I gave some advice a while back. Maybe instead of the yen pairs, it's the Swissy pairs. Pound Swissy and Euro Swissy, they're doing nice. Kiwi Swissy not doing so well. Aussie Swissy moving sideways. New Zealand is the weakest. Pound is the strongest, followed by Euro. And Aussie and Swissy are neutral. Ryan's like, well, the pissy is doing well. Pound Swissy, right? Yeah, but the bottom is on the monthly central pivot in a roll reversal. I mean, how predictable is that for going up? That's like a random walk. How could you possibly know that on the first of the month? I'm pretty sure we would have talked about it, but who would have known that on the first of the month we were at a roll reversal monthly central pivot buy zone that we would head up? I don't know. Who would have thought? Anyways, I'm sorry for the bitch slap, but I love you guys, man. I want you to fight. Fight for your right to profit, right? You gotta fight for your right to profit. Oh, I don't know. It's just like really, right? Every once in a while, I think it's needed. I mean, son of a, don't give up on the, right? Right? Don't give up on it, but do your job. Stick with it. I know these yen pairs don't look good. Maybe it's not a yen pair trade. Cool. Yeah, like Joe kind of says, you know, we do have fun together in these webinars, but it's not, we're not here for fun, right? It's not a stand-up comedy routine. Right? This is our hour of power. We got to make significant strides in momentum. I mean, God forbid this just turns into an hour where you sit here and some dude talks about currencies. You know, all right. I guess he's bearish in the euro. I mean, that's not what we need, right? I want you to succeed. I want you to be really good at this. You understand? Like really good. I want you to be really, really good. Right? And most people are not. And I think it's the workload, right? It's the unwilling or unable to do the work. So if you have the work ethic or the freedom to do the work, I think you can do this. But you gotta get crazy. You gotta be right. You're willing to do what 95% of people are unwilling to do. I think you can do it. But it comes down to this. If if what we talked about today is even remotely true to your situation, you need to seriously make some changes and be motivated to make the changes. Like you want to. It's not even a have to, right? Or you'll lie to yourself and you'll say, well, it was different this time, or well, I wasn't ready, I had this family issue, or well. And you'll justify the mediocrity. It's not your fault. Don't worry, it's not your fault. Yeah. Yeah, Joe says you know, working a full-time job, studying at lunch, reading charts before you go to bed. Yeah, right? Being a good father, being an amazing lover takes commitment. And Joe, hey now. Yeah. Anyways, but you know, so let's go. I'll see you tomorrow if you don't mind. I'll be here every day. That was good news, Daniel, by the way, the email or the text you sent me. Yeah, that's good news. I'm super happy about that. Thank you for everything. So, hey, peace on earth. May the pips be with you. May your profits be above average. I'm glad you're on my team. I'm glad you're here every day. You know, post some trade plans on Forex.Today. Okay? Maybe I'll change it. Maybe you can't even get into the webinar until you've posted a trade plan. That might be interesting. I could probably get the technology to do that, huh? Hmm. What quick draw tool do I use? It's part of the webinar software. The other thing I used to use Snagit, or Camtasia. What you can do is you can run Camtasia over your webinar and pause it and draw over the webinar. Cool. So anyways, peace on earth, may the pips be with you, may your profits be above average.